It's time to welcome back Rob Lees from Mortgage Choice, Blue Mountains and Penrith for our weekly finance segment. And today, Rob, we're going to be discussing low doc loans.
So, Rob, precisely what are low doc loans?
Well, low doc loans simply an alternative form of income verification. So normally most loans are assessed with full documentation. Full documentation for an employed person would be pay slips. So it's fairly black and white, especially if you're on a salary and it confirms your income. For a self-employed person, it would normally be full tax returns and financial statements. So a low doc loan is an alternative form of income verification, and it could be as simple as, in some commercial loans, just simply signing a statement declaring, self-certifying what your income is to be. So it's the kind of loan that there's no lenders, none that I'm aware of, that will do consumer loans as low doc. Consumer loans for employed people as low doc. So it's only ever going to be for self-employed people, and it's probably going to be for a self-employed person who hasn't done their tax returns, maybe for a couple of years, maybe their circumstances have changed, and their tax returns don't fully reflect what they're currently earning, or it might be that they take a little bit of cash. And as much as we'd like to think people don't take cash, they do. I still hear tradies talking about cash jobs. So
everyone loves cash, don't they? Yeah. Okay, so the respective pros and cons, Rob, of low doc loan, regular loan. What are the ups and downs there?
Well, on the positive side, it means that lending is open to self-employed people. I mean, self-employed people's circumstances are very different. It's hard to define what you earn because it keeps changing all the time. So in some cases, there's self-employed people who would not qualify for a loan if it was just a straight full documentation. I had a client just a few weeks ago, and his tax return only showed that he'd earned for 2013 showed that he'd earned $30,000. He was applying for a loan for $600,000. He owned 2 properties, no debt on both those properties, and he started a new business, and his income was actually quite strong, but it wasn't reflected in his tax return. So low doc loan was the right thing for him. So that's the positive thing. On the negative, the con is that it is possible to fudge the numbers. There's all sorts of verifications these days, so it's difficult, but it is possible, and so it's possible for borrowers to get into products that put them under hardship, and they get themselves into trouble. So that's the downside. It also, sometimes some low doc loans are more expensive, interest rates are higher, application fees are higher. From the lender's perspective, there's a lot more risk of default on low doc loans, and for the broker there's more risk because we need to do our own assessment, we need to make reasonable inquiries that if we're talking about a consumer loan, that it's not going to place that borrower under hardship. So we need to be satisfied that that's going to be the case, otherwise we could be in trouble.
And what sort of consumer protection is provided in regard to low doc loans?
Well, if it's a consumer loan, there is consumer protection under the National Consumer Credit Protection Act, and so lenders and brokers need to make reasonable inquiries to ensure that the loan is not unsuitable. It doesn't have to be suitable, as long as it's not unsuitable, and it's unsuitable if it places the borrower under hardship. So if we don't adequately do that assessment, and it does, and it's goes to court, it could be that there's recourse then for the borrower if we set up a loan that places them under hardship. If it's a commercial loan, commercial loans are unregulated; they don't fall under that act, and so I'm not aware of any recourse.
Okay, well let's have another little music break here. This is Phil Collins with "I Missed Again."
Phil Collins with "I Missed Again." He can't drum anymore because I think he's got severe arthritis in his hands, which is apparently. Yeah, well, he probably doesn't need to, does he? And we're back with Rob Lees. Rob, on the topic of low doc loans, what are some competitive offerings in the marketplace for this type of mortgage?
Yeah, I think the big difference between the products that are available, a lot of it has to do with the amount of documentation that's required. So that's the first thing. So it depends on the client's needs and what documentation they have that will support the income that they believe they're earning. So that's probably the first thing. So there's a little bit of difference there. The sort of documents that lenders will require as alternative forms of documentation will be BAS statements and an accountant's letter and trading statements. So those sorts of things. And most lenders will want a variety of those or a combination of those alternative forms of documentation. But I think probably for me the low doc product that's I think is probably one of the best on the market's the ANZ Low Doc 60. The sounds like a car, doesn't it?
It does.
The Low Doc 60. Yeah, it's
Could I get one in red, please?
You don't want to be in red when it comes to bank loans, Vent.
Black.
It needs to be in the black.
Good point. Good point. You see,
Yes.
this is why we have you on the show.
That's exactly right. So it only comes in black. But 60 being the maximum that you can borrow is 60% of the property's value. But the way they verify it, it's simple. It's based on BAS statements and an accountant's letter. And even if what you're declaring doesn't fit the normal criteria, there's a little bit of room to move if the accountant's able to explain why this self-declared income is a little higher than what they would normally allow. So there's a little bit of flexibility there. And on pricing, it's opened up to, it's the same level of pricing with the same discounting as you'd have if you were applying under a full document loan. So that's very good.
Okay, that is great. All right, so folks, you are now up to date on low doc loans, and thank you very much again, Rob, for joining us on the show. And that's Rob Lees from Mortgage Choice Blue Mountains in Penrith. And of course, you can contact them on 4739 9749 or visit their offices at 3/13 Hope Street in Blaxland.